Hello, good afternoon, everyone. This is onebisebplus. It's been long. I dropped a free tutorial here on our YouTube channel. So today I'll be dropping two major strategies. Um, the first one can be both strategies can be used on any volatility indices and even on forex markets. So the first one will be divergence. So many people still find it difficult to spot divergence. So today I'll be explaining to you how to spot a divergence and how to confirm a divergence. And number two, I'll be teaching you using two moving averages, which is EMA 5 and EMA 10. So right now let's go to our charts. So now, first of all, these are the indicators we're going to be using. So we have the first one, which is RSI, relative strength index. We have the period as 14 applied to close. Then the second one is the MACD and awesome oscillator. All these indicators, just set them to default settings. So now I will teach you principle of a trend. Number one, I will teach you principle of a trend, and number two, I will teach you how to spot the divergence. Now, principle of a trend, for example, an uptrend is expected to go up like this, retrace a little bit, then move up again. It is expected to break the previous high, then move up again, retrace, and move on. So as the trend is going up like this, you will discover that the indicators, the MACD, the RSI, will be doing something like this also. So whenever this market gets to any point and you see something like this, and the RSI or any of the indicators are doing something like this, you can see we have the previous high was low, which is the lower high, and the current high is higher than the previous one on the main chart, while the previous high on the indicator window is higher than the current high. Whenever you see something like this, this is called a bearish divergence. So the market is going up, but the indicators are telling you that the trend is about to change to a downtrend. Also, when you see a downtrend like this, it is expected to retrace, go down, retrace, go down, retrace. So whenever you now see something like this on the indicator window, you see something like this. Now you can see that the previous low was higher than the current low. Now on the indicator window, the previous low, which was higher, will be the one that will be lower on the indicator window, and the current low, which is lower, will be the one that will be higher on the indicator window. So let's look for an example here. Let's check volatility pair. Let's check volatility 75. I'm gonna be checking 30 minutes time frame. So I think I will need to go back to a portrait mode, okay, so that we'll be able to detect it well. see this divergence over here. See this previous high, this was the previous high, and this was the current high according to that uptrend. Now you can see that this high is now forming, this lower high is forming a higher high here, and this higher high is forming a lower high here. So once you have this divergence spotted on two of these, either 2 or 3 of these indicators, you can see also higher high, lower high, higher high, lower high. Do you see that? So you have something like this on the main charts and something like this on the indicator windows. So once you have 2 or 3, it's good for confirmation. But once you have only one, if only one of the indicators are telling you, are spotting the divergence, you are not good to go. Don't enter such trade. So this is your entry point. So you now combine, so the entry point, so many people find it difficult to enter a divergence. So if a market is on a trend, it will always have a trend line that it has been respecting for a while. So I think this should be the trend line. Yeah. So you wait. Immediately this market was able to break this trend line successfully over here, then you enter around this level. That's your entry point. Now so many people has entry points, but their problem is how to exit. Now this is where you start drawing your support and resistance levels. You can start using the previous supports for TP1, TP2, on and on like that. So you might take the first profit here, maybe you entered 2 positions, then you take the second profit here. So let's see if the second profit was, so can you see right now? So that's how to exit the market. Now how to exit the market in loss. If this market was able to break this trend line and break it up again, your stop loss should be above here. That means the divergence has been overridden. So that's for a bearish divergence. So let's check for a bullish divergence. So let me recap. The first thing, spot your divergence. Spot your divergence. After spotting your divergence, draw your trend line. So once the market is able to break the trend line, you enter. Then the third step is draw your support levels. If it was a bearish divergence, if you are taking a sell, start drawing your support lines, levels. So you can see I drew 2 support levels over here. So if you like, it might exit the market here. And to enter again, since this market was able to retrace here, you can see it's retraced there and continued. So you can enter here again and take the second profit here. So that's another method. So let's check for bullish divergence. There was no divergence spotted here. No divergence. Okay, let me pause the video. So okay, here is a good example of a bullish divergence. You can see this previous low. You can see it is higher than the current low on the main chart. This is the previous low, this is the current low. And on the RSI, the higher low was the lower low on the RSI, and this lower low becoming the higher. You can see that here. So the three indicators are confirming the bullish divergence. So you can also draw trend lines here to confirm it better. So I think you can see that. So you can see the main chart said I'm still ready to sell, but the indicators are telling you that it is ready to buy. So that's how to spot a bullish divergence. So where will be your entry? The second step is to draw a trend line, the trend which the market has been respecting. So you can see the market was able to break the trend line over here. So this is your entry. You can see immediately after your entry there was a pullback, so your stop loss should be below this support level, and if it was a sell, your stop loss should be above the resistance level if it was a bearish divergence. So you've entered here, right? So your TP, your exits, I've shown you your stop loss exit. So how do you take your profits? You start drawing the resistance levels. So you can draw two major resistance levels. So we have two over there. So first profit taken over here. So let's see if it will hit our second level. It doesn't. Okay, a little bit over there. So if you were with the market, you would have closed that in profit before all this consolidation started. So that's that about bullish and bearish divergence. So I guess you should now understand better how divergence works. Some people know how to spot it, but they don't know how to enter it. They don't know how to stop loss. They don't know how to TP. So and some people only use one. Sorry about that. Some people use only one indicator to spot their divergence. It is not really good. You need at least 3 indicators to spot your divergence. It is even better if the 3 indicators are spotting the divergence at the same time. That will even give you better chances. So that's about the divergence. Now onto the EMA 5 and 10. This is very good in scalping and in even trading long-term trades. You can use it for confirmation for long-term trades. Maybe you're expecting a pullback in an area. For example, this area now, maybe you are expecting the market to buy at this level. Now you can see the EMA 5 and 10 crossed over here. So at this point you've entered the market here. This is 30 minutes time frame. If it was for a scalping, at least from here up to this level before the market changes direction, you would have taken some pips. So this method is very simple. My EMA 5 is the red line and my EMA 10 is the blue line. So it is very simple for using it to scalp. So immediately the cross. Okay, for example, this is M1 right now, and you can see it has crossed over here. It has crossed. So let's try to scalp this market now. It's verse 75. So I'll be scalping. I might take like 2 or 3 candles. So you can also use it for boom and crash. Let's go to boom 500. See the EMA 5 and 10 cross there. So the principle for boom and crash, use it to take only 3 candles after the crossing and exit. You can see, you can use bigger lot size to take it. After spotting that crossing, enter for 3 candles. You can see that. There was no crossing here before another spike. You can see that. So that's it. That's for boom 500. Let's see for crash 500, EMA 5 and EMA 10. There was a crossing here. Take your 3 candles and you exit. There was a lot of crossing over here also. So you take your 3 candles, you exit. Take your 3 candles, you exit the market. So that's that about EMA 5 and 10 crossing. Let's check this trade. Now there's another thing about markets. Once you enter a market, once you see a signal like this and you enter for a position and the market starts consolidating, you know, this is a scalping. This is a scalp. So once you enter a market and immediately you enter, it starts consolidating like that, another thing might happen after the consolidation. So you expect breakout over here, either down or up. So the best thing is exit the market immediately. So I want to try to exit now, though it's now breaking out to my favor, but I will exit. So I took about, you can see it has dropped again. Oh shit. Okay, so I was able to take 35 cents over there. It will still keep dropping. It will keep dropping. But if it's a long-term trade, you can use this also on 4 hours time frame. You can see it was trying to cross over here. There was no good crossing, but the market crossed there. So if you have entered here for the sell, at least up to this level, this is V75 4 hours time frame. So at least if you enter the sell here up to this level, that's a lot of money. So thank you very much. God bless you. Please, I beg of you, kindly subscribe to my channel. Click on the subscribe button and also click on a post notification so that whenever I drop a new video, you will be able to see it. You'll be able to see the notification. So thank you. God bless you. Contact me on WhatsApp for training, for signals, and for consultancy. So I also have a free signal channel on Telegram. The link will be dropped there also. Check the description of this video. Thank you very much. Bye bye.